Ladies and gentlemen, good morning, everybody, and welcome to the second of the discussions on the tax reforms 2025. Yesterday, we spoke about the tax reforms as they affect corporates, and today we will be concentrating on the tax reforms as they affect individuals. Just before we start, I'll introduce very briefly our two discussants today. Russell Eastaugh is currently the Africa tax lead for Regan Van Roy. He has been head of tax for Kingmakers Group, which was the betting group across the whole of Africa, including Nigeria. And also he was a tax partner for PwC in Nigeria. And years back, we were both inspectors in Her Majesty's Revenue and Customs. And more recently, we were both on the Fiscal Policy Reform Committee of the last government that put in place the Annual Finance Acts. So there's a lot of experience that's going to be shared from him today. Also, a fellow discussant is Theophilus Ewanu. Theophilus is the founding partner at Alex, and he leads the firm's taxation, corporate, and commercial practice groups. Like me, he has qualifications outside taxation. He is actually a mechanical engineer, but we have the benefit of him widely acknowledged as one of Nigeria's leading tax practitioners. He's also a fellow, as is Russell, of the Chartered Institute of Taxation, where I have the honor of being the coordinating dean of all the faculties of tax. Theophilus was also a member of the ministerial committees established to review the framework for enabling private equity funds in Nigeria and the ministerial committee that reviewed the framework for the grant of pioneer status. So both of our speakers come with a great deal of knowledge, both from the commercial tax side of the world, but also valuable insights into policy and policy development and some of the government issues around it. Now, the format is going to be that Russell and Theo will talk through a couple of slides and we'll be interrupting each other, and I'll be asking questions and prompts as we go along. Please feel free and actively use the chat box and the Q&A box. It might take a few seconds to find out where they are. They should be at the top ribbon, depending on how you set up your system. If you put your questions and answers in there, we will try and provide the answers. Although if you have an answer, then that's even better for us. Today is quite auspicious. It starts with the fact that a lot of activities have taken place in the National Assembly in the last 24 hours. And the House of Assembly has passed the acts, has passed the bills that they have so far. They still have to proceed to Senate for their own views, and then that will all have to be ratified and taken to the president for him to consider whether he signs it. But they have made a number of amendments that are in the public domain around value-added tax, inheritance tax. Those are key things that will affect individuals and enterprises. Military salaries, they'd be interested in what's happening there. The accountability and corruption measures are also within the things they've looked at. And also the development levy is staying, but if you try to bribe a tax official, according to the current version, you could spend 3 years in jail or up to 2 million naira. So I think we are looking for better things. Overall, I think we all agree that the reviews are in the right direction. But as always, and it's my favorite phrase they heard yesterday and you will hear again several times today, and that's that the devil is in the detail. So with those few words, I'll pass over to Russell to start us through the discussions, and we'll take it as it goes. Thank you. Over to you, Russell.
Thank you, Mark. That's a very good introduction, I think, and thank you for the introduction to both myself and Theo as well. Effusive as ever, so thank you for that. And yeah, when I was going to start off with saying there's a lot of changes in these bills, and we're now a little bit hampered, but there's a bit more change than we thought, as the versions we've seen have been slightly amended. But there's still a lot of interesting things in there. Interesting can mean two things. It can mean people get a benefit from it. Normally that means a reduction in taxes, or they can have some extra hassle or pain, which they weren't wanting, but it still could be seen as interesting. And I'm afraid the bills affecting individuals have a bit of both in them. So very sweeping changes. I think there's actually fundamental reform in the tax system coming out of this, and we'll see a bit of the detail coming up as we get through it. But it affects all the taxes you can think of, and probably a few you can't. So it affects, obviously, personal income tax, companies' income tax, which is less relevant in an individual discussion, excise, one particular issue we'll come to, withholding taxes, stamp duties, VAT, although a little bit less than it was going to, and admin changes, and just the whole framework of the law, taking it from umpteen different acts and combining it all in one encyclopedic Nigerian tax bill, plus a separate administration bill and founding laws for the various tax services and the Joint Tax Board. So a lot of change, a lot to get to grips with that will come out of this. But overall, it's an interesting attempt, a good attempt, broadly speaking, to modernize the tax system and get it where it wants to be. Never perfect. I think no tax law is ever perfect. And I would hope we'll continue to see amendments coming up in years to come, as was done previously with annual finance acts, to correct some of the issues, either because they're no longer fit for purpose, or the economy has changed, or something didn't work, or there's some unintended, unexpected consequence. And those things come out of all tax law, I think. Right. So I think let's get on to some of the issues. Theo will interrupt me when you feel I've said something outrageous or wrong. But I think some of the good points on the tax rates, and this is interesting. Now, since we wrote this, of course, people serving in the military have had an even bigger decrease in their tax rate, as it's gone to nil, the personal income tax rate for them, according to the House of Reps. Don't bank it just yet. The Senate and the President may have their own input on that.
Yeah.
But at that moment, that's what the House of Reps is saying. But generally speaking, there was an attempt to reduce the tax burden, the personal income tax burden on the lower paid, and also to get rid of that minimum tax, which was, 1% of your gross income if you weren't into the other bands, which was a form of tax on poverty, as the chairman of the Presidential Committee on Tax Law Reform had said. So that is a good thing for those. What's perhaps not so welcome for people who are better off, likely including the audience here, is for higher incomes who will face an increase.
Yep.
A higher maximum tax rate as a 25% band. It used to say 24% was the top rate. It was misleading, in my opinion, because the way the annual exemption worked, which was a percentage of your income, or a flat rate, whichever was bigger. So in fact, your maximum possible tax rate under the current law is 19.2%, or in round terms. So it'll go to 25. And the bigger issue then is a lot more foreign income will be included in that, even if it's not brought into Nigeria. And you may think, well, that's assuming anybody knows about it, but revenues and services are getting better about knowing about things. So the idea was to tax all foreign income.
Yeah. Russell, maybe I can just throw in some detail there. Now, for low income, the 800,000 naira per annum is going to be exempted. But if you all remember, the minimum wage that has been approved is 70,000 a month, which is 840,000 a year. So, ideally, they should have said, okay, anybody within that should be exempted. So what it means is that those who are on, everybody's going to be caught somehow, even if you only caught, for the difference of 40,000 a month, per annum. So I don't know if that's an ideal situation. With regard to high incomes, up till now, 20% of your gross was exempted. So whatever your salary was, if it was 100 million a year, you take out 20%, and then you start taxing the balance. Now there's no such 20% exemption. You only have the 800,000 naira exemption, which is very little compared to somebody on that sort of money, and then you start taxing immediately. So that's what Russell is explaining, that the impact for the high incomes is quite significant.
It is. Although having said that, I am sitting in the UK and I'm paying 45% plus national insurance. It's coming at about 50. It's a lot more painful than when I was in Nigeria.
Yeah, but you're getting the service to some extent.
I was going to say, a caveat that. Yeah, there's a lot of people here thinking they're not getting value for money. I think that goes in most countries.
Another significant difference between the 800,000 and the 840,000 is that up until now, it was only those who were employment that were getting the exemption from tax. This 800,000 applies to you whether you're a mama put, a small businessman, or an employee. So it actually is a much wider net. There were a lot of people who effectively are laborers who were paying a minimum tax, even if they were earning 25,000 naira a month, they were paying 1% tax. Now they would definitely be out. So in some ways, it's broader, even for that 40,000 difference.
Yeah,
we will have to cover the tax for service, which is a term that we tend to use in terms of what do I get for my money. But hey ho, continue, please.
Yeah, a different discussion. Yes.
Yeah, I agree with all that. I think it looked a bit untenable to treat the self-employed worse than the employees. If anything, employees should pay a bit more tax as they've got better security. But that's another discussion. So I think this is a fairer thing. It caused some pushback from the states at some stage, who are moaning they're going to lose a lot of their revenue because they like taxing poor people, it seems. It'll cause them, I think, to have to change the emphasis in who they're taxing. And who was the famous bank robber in the States? Was asked why he robbed banks. And he said, well, that's where the money is. And there's perhaps something similar in this. Tax authorities must go after the money. And this will kind of encourage them. Right, to try and continue a theme of sort of more or less good news, there's a tax relief for rent paid. It's got a limit, but it's something. There's also a condition which says to get the benefit, you have to claim it, and then you have to disclose who your landlord was and how much you paid him.
Mm-hmm.
Now, that I remember was already a question on the Lagos state income tax return. I'm not sure how many people ever answered it because there was no particular consequence for not doing so, but it's obviously they're now trying to make that a bit more rigorous.
Mm-hmm.
Yeah. Any thoughts on that, Theo, Mark?
Well, I mean, I agree with you, and I think that the flip side of this rent issue is that stamp duty is meant to be paid on lease agreements, and in practice, most people don't, actually bother with stamping the lease agreements. It's usually for a year or two, and so you pay the landlord, and you move in. So they're going to try and catch all that through this. So if you want this relief, you have to provide the details.
The key impact of this is actually, again, to be on the higher net worth individuals, because they are generally the landlords. They generally have a significant amount of income from rent, for which there's a provision of 10% withholding tax, which doesn't apply. I remember once when I tried to deduct withholding tax in respect of one of the properties we were renting, and I was told that if I did that one, then I was no longer a tenant. This one, the law now makes it clear. What this is particularly going to help with states, because a lot of the money that is flowing around, and eventually to catch up with Lagos in terms of having more information about the people who hold this passive wealth and passive income will come to light. So it's a good purpose, but people who own a lot of properties better brace themselves that the days when they could take that source of income for granted are over. They will have to pay tax on it.
Correct.
Yeah, I think, and that's all good and true. I think, we'll come to stamp duty in a minute. I think just remember the withholding tax regs that came into force on the 1st of Jan. My recollection is those no longer require individuals to deduct withholding tax, so you shouldn't have the argument about whether you should deduct from your landlord any longer. I can remember having arguments with landlords who used to suddenly gross up for the withholding tax, even if I thought it wasn't applicable. It was all a way of trying to get more money out of me, I think. Right, if we go to the next slide, please, Candice. There was something here on benefits in kind on accommodation, which has been a source of arguments over the years with employers, employees, and the state tax authorities. And broadly speaking, now what they've tried to do is refine it. So if there's a rateable value quoted by the local authority in which the property sits, then you use that to determine the value of the benefit. If there isn't, the tax authority can decide itself, and it can be up to 20% of the gross remuneration, which is a bit of a license for wild behaviour, perhaps, but we'll see. But it may be a good time to encourage authorities to create a rateable value and collect some rates.
Yeah, I think the relevance of this for the audience is that your income as an employee includes all benefits. So you don't break it down and say, okay, there's a salary, then there's a car allowance and a dressing allowance and a housing allowance. Now everything is taken in, and this is one of the things that will be taken in. So if the employer is paying your rent, that's part of your income.
Yep. Right. And next good thing, I think it's largely a good thing, was double tax credits. And if you've got foreign income, it's possible that foreign countries tax some of that by withholding or some other form. You can now get a credit for that tax in Nigeria. You could always get something, but it was limited to 50% of the tax imposed by a Commonwealth country, if you can work out where those were. And now it'll be the tax imposed by any foreign country. But there's a caveat: the income has to have been brought back into Nigeria and through official channels. It looks a bit peculiar to me, because if you don't bring the money back at all, it's still taxable. And we'll come to that in a bit. But it'll still be taxable, but suddenly you won't get the credit, which looks a bit unfair, to be honest. So, as I said there, one of the things you'll see changing is the worldwide basis. I think I mentioned it earlier. So foreign income is taxable. Whilst previously there were quite a lot of exemptions or special rules that prevented that. Going on from that, though, capital gains is now much clearer. They're also on a worldwide basis. So if I have a house in London and I sell it, then it becomes taxable in Nigeria, probably taxable in the UK as well. So then you have to work out how much you're paying where. But yeah, now what I found, that was probably already the case for most individuals in Nigeria. It was quite difficult to discern what the law was. So this makes it clearer. I can remember looking on the last Lagos state return I filled in, I couldn't find a box for capital gains. So that's something for them to work out, how to create an easier to use form that encourages full disclosure.
Yes, but I think this is where double tax agreements may be relevant, and people may start asking advisors, okay, which countries does Nigeria have a double tax agreement with? There are about 15 or so. UK is one of them, so it means that you might be able to take advantage of some of those benefits.
You might find that British CGT is higher, it might be lower, but you might also find that Nigeria gets a residual, right? So it taxes what's left after Britain's had its. It all depends on the treaty and the rules in the foreign country. There is an exemption I saw for selling your house, but it's a bit limited. It can only happen once in your life, and it's got a managed limit, and they can have some land around it up to an acre. But it's the once ever limit is perhaps quite a strict one, certainly much more stricter than, say, the UK or South Africa.
I can't remember if you're going to cover this later, Russell, but another change to capital gains is that they are going to be calculated but brought in and taxed at your tax rate, as if it's income and no longer as capital gain. So you no longer have the benefit of the 10% rate for capital items. Correct. Which people, especially high net worth individuals, manipulate to make sure they crystallize them at the correct time for the minimum amount of tax possible. It's now going to be charged as part of your income from the year. And so effectively, it's going to go 25% to 25% from 10%. And that is going to be a significant issue for a lot of people. But we'll now know you own the property because you will have rented it out, and we'll have got the fact that you've got a rental income on it. So they're interesting behind the scenes for a good administrator to pull together all of these wires and weave a good story around who needs to pay what tax. I just say that as an ex-tax inspector.
Yep. Correct. There's another wrinkle at which, and because the law is voluminous, this bill is lengthy. And something I noticed yesterday, which I hadn't seen before, which is even interest income earned by an individual, well, the withholding tax is no longer a final tax if it's a resident individual. So there again, you're suddenly shooting up from 10% to 25. Stamp duty.
But
Sorry,
that's if it's not a government bond. If you still get the exemption if it's a government treasury bill or government.
Correct. Yes,
bond,
you would, because they'll get those. They're protecting their cost of borrowing. But if you've got money in the bank, not so good. And presumably that will apply also to bills issued by bonds issued by companies, because that corporate bond exemption stopped some while back. So yeah, generally speaking, an increase in tax on those things.
Yeah.
Stamp duty has been simplified. To my mind, not enough. And there's still a few nuisance things there. Really, who writes checks and still wants to pay stamp duty on a checkbook leaf? But it's still there. But the big one is probably the transfer of shares, where the exemption has been abolished. So transfer of shares will now be subject to stamp duty at 0.225%, whereas previously there was a sweeping exemption.
Yeah.
So that's
what's happened to the plethora of little 50 naira here, 25 naira there in stamp duties? Have those schedules been removed? I'm sorry, I haven't.
That's the electronic one. That's the electronic.
Yeah, not just the electronic one. Traditionally under stamp duties, there's been a whole plethora of stuff we inherited in 1948. The rest of the world has moved on to just taxing, stamping major items. But there was still a whole pile of incidental things where Adam Smith will be turning in his grave because the cost of administration exceeds the amount of money you're charging.
I think, Mark, I did look through it. There's still a schedule. It's been weeded out. There's less nonsense in that than there used to be, but there's still some funnies. And one of the ones I couldn't work out was appraisements, valuations, where the charging sections talk about a stamp duty on appraisements, which was always there in the previous law, but the schedule setting out the rates doesn't show it. So hopefully that one's gone by stealth, because I could never really understand why there should be one. Stamp duty on an valuation, but there's a few funnies. I mentioned the checkbook. There's a few others still lurking there. Nonsense values. There is a stamp duty on leases. It's been simplified a bit. You can read it a bit more easily, but you won't like the answers. And what else was there?
Yeah, it's always been a bit steep, that one, and I don't know why it has to be that steep.
Yeah, no, I don't know either. There's still one hanging around on receipts as well, which looked a bit odd as well, given we got VAT. But yeah, so I think there's still some wrinkles in VAT and in stamp duty. And I apologise, we haven't got the full detail yet because it's just so much of it. But when the final bill arrives, there'll be a lot more analysis done when the final act arrives.
Indeed.
Yeah. So let's move on to other excitements. Forex. Yeah, obviously we still have exchange control. Now, one interesting thing here, in the wrong sense of the word, is the excise duty. If you have to find yourself buying Forex at a rate higher than the official rate, or NAFEX rate, then there'll be an excise duty, which will be 100% of the difference between the two rates times the amount of money you're trying to change. Which will be not very nice news if you're trying to buy your PTA or BTA or your or pay monthly for your school fees, and you find yourself unable to get it out of your bank. So that's going to cause some. It's going to effectively pushes up the cost of buying foreign exchange. It looks like a measure to try to restrict the use of the parallel market by stealth. So rather than just saying you can't do it, they just say you can do it, but it costs you a lot.
Yeah.
And with the movements in the exchange rate yesterday, that's perhaps even doubly unwelcome. At the moment, as far as I know, there's not a huge gap between the two rates, but there was one a while back. It could open up again, and then that'll be unlikely, unwanted news. Just on that, there is an information requirement. Anybody having knowledge of such a transaction has to tell the tax authority within 7 days or face a big penalty. So we'll see how that works. But yeah, we may find it gets the tax authorities excited, especially now they can't spend their time running around taxing low-paid people. They can put more effort into policing these things. Withholding tax, as I said, I included the change that came with the regs. Individuals don't have to deduct withholding tax. There is withholding tax on betting winnings. These things came in January, so perhaps we won't spend a lot of time on that. Limited liability partnerships may be a limited interest to this audience, but I think the change will make them even less interested. So a limited liability partnership, often used by professional firms in other parts of the world, but in Nigeria they're going to be taxed like a company, the company tax rate, which hopefully will be down to 25% eventually, plus the development levy. But then all profits will be deemed distributed in that year. So the withholding tax kicks in immediately. You don't get any relief for retained income held back in the LLP. So the tax rate for members of a limited liability partnership, the overall effective tax rate will be much higher than if it was an ordinary unlimited partnership, a general partnership. So perhaps not all that welcome. Right. What's the next slide, please? An interesting thing there, I think it's interesting anyway, was on working for a foreign employer. And this would not automatically mean that the employer becomes taxable in Nigeria if the work's being done for foreign customers. Now that's, I think, designed to try to encourage people, foreign companies, to employ people in Nigeria to do work for as back office for their foreign customers. And perhaps playing on the advantageous exchange rate from a business point of view, Nigeria has now become a relatively cheap place to employ people and use their skills in a high value economy. So that's welcome, in my opinion, and perhaps it will reduce the need to JAPA.
Yeah, I think there's going to be an impact on, a couple of impacts. One is it may reduce the need to JAPA, providing you're not looking at the other services that you get. The second thing is it will provide an opportunity for upskilling of our youth, especially in an AI internet world where a lot of value is in information technology and those particular skill sets. And also, because even the money that comes in, once it comes through formal channels, is taxed, but at a reasonable. I can't remember if they've made any significant changes to the way in which the money comes in. Before, it used to be if it came in through approved channels, it also wouldn't be taxable. But either way, it would be increasing the amount of FX that is in the country. And I think that we must increase the amount of FX that's in the country, given the change that the House of Assembly has rejected the payment of taxes earned in a foreign currency in Naira, and said that they want that tax that was earned in a foreign currency to be paid in the foreign currency. And if I remember, the Presidential Committee at the beginning was giving one of the reasons why they wanted to tax in Naira, to pay your tax in Naira, even though you had FX, it was creating an artificial pressure on the FX, where you were going off to have to buy money at any rate in order to pay your tax, which was still going to be used within the country. So it was a round tripping of a sort, and was also encouraging the black market. Now, with the penalties for buying above the black market rate, if you're not able to get your FX in time, what's the effect is that going to have on my penalties? What effect is that going to have on my interest charges? Because you're the one who's bottlenecking my ability to pay you in the foreign exchange. So there's a lot of unpacking to do there, unless I'm over interpreting things.
No, you're quite right, Mark. The income is in FX, and they try to say, oh, well, even though your income is in FX, when it's time to pay the tax, just give us Naira at the right rate. If you remove that, then everybody's looking for FX. The CBN is saying they don't want to dollarize the economy, but this, does the opposite.
It does.
Yeah.
So, I think there's a difference perhaps between a person who sells something to a foreign customer and earns dollars and he's got the forex, and somebody who pays an expense which is denominated in forex, like a management fee. He hasn't got the money, or you're paying for use of software, for example. He hasn't got the forex, and if he has to pay his withholding tax, he's got to go and find it, and it's not automatically available. So then he's more likely to have to go to the parallel, put pressure on the exchange rate. To my mind, the whole thing delegitimizes the currency, which is a strange thing to do. So I thought the original proposal was in the bills presented to the National Assembly was the correct thing to do, to give people the option, if they wished, to pay in naira. So it's a bit unfortunate that the House of Reps has rejected that, and we'll see what happens as it goes through the rest of the process.
Yeah, I suspect they didn't fully understand the fiscal policy implications. They're just reacting, you know.
I think they also think there's a magic wand and it'll somehow create more forex coming into the country. But in fact, for a lot of transactions, it won't. But yeah, I think that was unhelpful. Right. Well, that was another thing the National Assembly and House of Reps did yesterday, was to amend this next bullet. Penalty for corrupt tax officials and for those who corrupt them or attempt to do so. So you go and dash your local taxman, then you can be penalised for doing so. We'll see how well that works in practice. But what the NAS did is to increase that penalty that was in the bill. Sorry, the House of Reps.
3 million naira and or up to 3 years imprisonment. Now that seems to be for the person who does the corrupting. The corrupted? Question mark.
I can't remember the penalty. It was there, but they don't seem to change that. But it was still, it's still a hefty penalty, and certainly much more than was there previously. You said about the devil being in the detail, and the devil being in the implementation here.
Yeah.
But it's the sort of thing they could use occasionally to make some example of somebody. And yeah, bear in mind that being charged.
There was also
being charged with an offence that carries a certain minimum jail sentence, imprisonment sentence, can cause you not to be allowed to have an American visa without special permission.
That's true. There was also another change that the House of Assembly seemed to be making, and that was to remove the ability or the right of the tax authorities to determine who should be the tax advisors to companies. What sort of implications does that have, do you think? They said it's to make sure that proper representation.
Okay, regulation and registration of advisors. That's the one you're talking about.
Yes, that's right.
Yes. I think the original proposal was that anybody could do it, and they're saying no, that it should be done by properly registered people.
No, the one was that the revenue authorities were responsible for registering you and accrediting you to be able to be represent somebody. And it appears, again, the devil is still in the detail, but it appears as if that has now been changed, and the revenue authorities cannot decide who is the person doing the representation, but that the person doing the representation must be a professional body, which at the moment is CITN and ICANN, along with the battles.
Yes, I think their concern was that the revenue authorities could license anybody.
Right.
So there was, the filtering. In fact, there was no filter. Once you can get your friend in the revenue office to license you, you could do business. Whereas what they're saying is no, let's filter it through the professional bodies, CITN, ICANN, and that way. So that's, I think, was the thinking.
That subject came up a few years ago, I remember, where I think it was Dundee Fowler, when he was at FRS, tried to obtain the power to regulate the tax advisors. And CITN and the other professionals, the lawyers and accountants, weren't keen on it at all, and got it stopped. So now they've tried to bring it back through this legislation, and it appears that the House of Reps has resisted it.
Yeah.
Okay.
Which is probably not the biggest issue in the whole bill. So it's yeah. I think
there were also a couple of other things that were mentioned. Again, as I say, we don't know what makes it through to the end, but there was a proposal around distraint of property, and the House of Reps seems to want to make sure there's a court order before a revenue authority can dispose of a property, which would seem to be a taxpayer protection act. And also in order to protect the economy itself and perhaps provide some transparency to those who are granted exemption from paying income taxes, either by governors or by the president, that those need to be subject to approval by the National Assembly. It wasn't clear whether they had landed on that or whether they were bringing that to the table. But they also were saying the Accountant General could not withhold money. Those are all seems to be on the administrative side of things. The impacts on individual taxpayers may be who would have won under the previous less transparent methodology. Again, perhaps I'm reading too much into that.
No, but I think, Mark, you have a point, because people who have, when customs seizes your item because you haven't either paid the customs duties in time or something else, they auction it at, people complain that their cars got auctioned for next to nothing. They don't need a court order. And so what this is doing is saying, well, for the FRS, the revenues authorities, they can't just go and auction it at any price they like. They must get a court order. So there's some kind of filtering happening, we hope, but it does slow them down, But, people who have had experience with customs have this complaint. They say you bought something worth 10 million. They tell you that you've not got all the paperwork, and next thing they've sold it for 1 million.
Yeah. Now, of course, Nigerian Customs Service is not going to be subjected to these laws, as far as I know.
Yes, exactly.
Like to regulate them. So, but yeah, I think some protection is necessary there. I think you have occasionally seen over enthusiasm by tax authorities in distraining. Initial distraint without a proper court order was quite common, and then seizing the property and selling it without further orders. So it's welcome to have some restraint on their abilities. There was something we noted yesterday, but it also affects individuals, is that the time limit for assessing, which is 6 years, generally speaking, from when the self-assessment or assessment was first made, and that was always extendable if there was a case of fraud or willful default, etc. Now, what's put in there is that 6-year limit can be extended if the tax authority started an audit within that 6-year period and hasn't yet finished it. So that effectively gives them the right to extend forever, I think, because day before the 6-year deadline, they'll suddenly send you a notice, we're starting an audit. And then any assessments they make as a result of that will still be seen as being in time. That's a bit unfortunate in my mind. 6 years is long enough. I struggle to remember what I was doing 6 years ago. And I think lots of people would have similar things if they had to come up their records and how long you're supposed to keep things for. So giving tax authorities open-ended ability to just extend the time frame didn't look right.
Yeah.
The big, we made a point there about a single tax ID for the entire country. And I think that'd be useful administratively, and that you wouldn't have to go and get separate registrations in each of the states and from the FRS, etc. Again, that may have some practical problems in implementing it, but it's probably a good thing to aim for. The big thing that happened in the National Assembly yesterday seems to have been some changes to the proposed changes to the value-added tax. So, the idea was to convert Nigeria's current value-added tax into a proper VAT, as I like to call it, where a trader is allowed to claim input tax on all his costs, not just his cost of stock for resale or manufacture. And linked to that, and to pay for it, was an increase in the rate, which is going to be staged over a period. It's going to go from 7.5 up to eventually 15. Now, what the House of Reps seems to have done is to say, no, it'll stay at 7.5%. They didn't make any comment on whether they were going to still allow the claims of input tax. But it looks, as they didn't say anything, we assume they will. So you have a proper VAT system, but suddenly staying at the same rate, which would mean a lot more refunds having to be paid or input tax allowed, which should result in a lot less collection, which is probably not what government intended. My understanding is that broadly the increase in tax rate was designed to compensate for the conversion of the system to make it a more equitable tax, both for the customers and for the business people operating it. So that's we'll see what happens with that when we see the bill, but more importantly, we'll see what the Senate and then the President do with it when they see it.
Can I just remind people who are listening in, if you do have any questions, put them in the Q&A box or put them in the chat box, and Theo and Russell we'll try and deal with those particular points. Or if you're totally frustrated by that, stick up your hand and we'll try and get you to say what you want to say. Sorry, I interrupted you, Theo. You were about to speak.
No, I was just going to say that, to Russell's point about the states getting less money because the base for VAT would be shrunk to some extent. There's also the other thing, because the personal income tax is excluding the very low income earners, and many states probably rely mostly on the civil servants in their states for PIT. There are very few businesses or that employ people that they can tax. Not every state is as lucky as Lagos State or Abuja or River State. So in many states they don't have that base, and so by reducing or exempting lower income earners, many states will see their internally generated revenue go down, and then if the VAT revenue also goes down, in a year or two, I can see them saying, "Oh, I think we should move that 7.5 to 10 or 12.5 or something."
Yeah. Although, sorry, Russell.
Go on, Mark.
No, I was going to say that in the last day or two, Taiwo, who is the chairman of the Presidential Task Force, actually was taking all of the revenue authorities to task on this particular issue of digging around the weeds rather than going after the higher taxable people who we should be going after. And we've spoken about a number of things that will make that far more visible. The single tax ID, the fact that rents, if you want to benefit from the reduction as an individual for the rents you have paid, you have to start reporting that one. The limits for bank giving information, I think, has been suggested as a rise from 25 million, which was on the bill, to 50 million for individuals, and from 100 million to 250 million for companies before they make their reports. The stated reason by the National Assembly, and I am quoting from the TV coverage that was there. So if that's wrong, I'm wrong. Means that those thresholds are also going to go up, which again means that the tax authorities at both state and federal level, federal is already dealing with the big boys, but at state level, where the bulk of the income tax is collected, they do need to raise their game and improve the training of their staff. When I think about training, I think about the whole plethora of changes that are taking place and the necessity for training of both the revenue authorities and so on. I'm sure both of you have views on the amount of training and sorts of things that we should be looking out for in these areas.
Yes. Yeah.
Well, I mean, in terms of personnel, the FRS at the federal level, Abuja, has over the last few years been bringing in pretty competent people, I must say. I mean, we've dealt with them, and they seem to know what they're doing. It's not as easy as it used to be to run rings around them. Lagos State is also.
You didn't say that.
Well, Lagos State is also, in that regard, has also done quite well. Apart from having a database where they put everybody's name in and et cetera, et cetera. I mean, I remember many years ago when Fashola was governor, he said, "Oh, all these lawyers, making money on the island in Korea and VI, and they're paying to the local office that doesn't understand how to tax people earning 100 million. They should be moved to the high net worth office, which is in Alausa." So they moved everybody. They probably moved Russell to that office as well. So he said, no, these guys, because if you're going to your local office in Obalende, whatever you say, they'll accept. So Lagos State is quite well advanced in that regard. But many other states need to up their game. And I agree with you that that's going to be a challenge. They don't have the money, but they need the money in order to up their game to get more money. So it's going to be a circular problem.
Yeah, there's a couple of things on that in the bill, which I think we're trying to anticipate. This one is that the state authorities and the FRS, for that matter, can cooperate with each other, and perhaps that should be encouraged. And if, a random example, Gombe hasn't got the resources to run the system, perhaps they can seek assistance from somebody else who has for a suitable fee. Secondly, is the role of the Joint Tax Board. Apart from being renamed, the Joint Tax Board will have an expanded role of trying to encourage more research and looking for where the tax gap is and who should be paying it and what can be done about them. And will give, I think, be giving more support to the states. Now, that seems to be the concept anyway. But I think, who was the Minister of Finance some time ago who published a figure of how many people were paying above some random number? I forget what the number was.
It was under Kemi Adeosun. It was as part of the justification for the VADES work when they found out less than 1,000 people were paying 10 million naira and above. Even though if you look at all of the statistics, Nigeria has over 50% of all the US dollar millionaires in the whole of Africa. Of those people paying above 10 million, the majority of them were people who were directors of banks and so on, who were paying under PAYE and therefore had no ability to influence their tax bill because they were not doing self-assessments. They were being assessed through the PAYE system. So the whole of that area does need to up its game. And time and again it's been made the difference about South Africa. Russell, you have experience of South Africa, where 80% of the money comes from about 10 or 15% of the population in terms of personal income tax, where the sheer figures of personal income tax dwarf anything at all that we would see when you compare the GDP of Nigeria and South Africa or any of these other countries. So I think on that question of education, tax advisors are going to need to understand more about where the laws are, about what the penalties are, especially as the revenue authorities start fiscalization, start to understand what is happening with taxpayers. And there has to be a lot of taxpayer outreach in order for them to understand. There might even be need for an amnesty again to bring people safely on board. I don't know what you think about that approach.
I'm not that keen on amnesties if I'm talking to government, and obviously as a tax advisor I'm a bit keener, but I think before you have an amnesty that can be successful, there's got to be a stick. People have got to be afraid they might get caught, and the penalty for being so will be unpleasant, and therefore they got some reason to take advantage of the amnesty. Otherwise the risk is they'll say, I'll wait for the next one, thank you.
But if you remember the last amnesty, what Fowler did, he was chairman at the time, was he gave the amnesty for a year or so, and then he followed that up with going into the banking system to track people's bank accounts, which the FIS has the ability to do even as we speak. And thereafter he was, wielding the stick. So, and you couldn't complain. He gave you an amnesty a year before. Now he's saying, well, you haven't been reporting in full. So really, you had to comply. You couldn't complain.
Yeah. Now, in South Africa, you mentioned Mark has done some funny things over the years. And I remember at one stage they had a problem with getting better off people to actually file their tax returns on time. So they started a campaign. Friday afternoon, they'd go around with a warrant and arrest people. You haven't filed your tax return. And you can't get bail until Monday morning, and you don't really get police cells over a weekend. And that got the compliance rate up quite quickly. So
interesting.
Yeah, if you don't put the right numbers on the return, of course, that's another problem. There was one other thing coming out of NAS or the House of Reps yesterday, which I'm intrigued by, which was saying they prevented the imposition of an inheritance tax. Now, I read the bill, I couldn't find an inheritance tax, but Nigeria has one. It's hiding, and because one of the things I moaned about not having been addressed was probably codifying it. The estate duty or inheritance tax is run by the high courts, and it's a probate duty, and it's governed by the rules of the High Court, which, to my mind, is the wrong place for a tax. Tax should be codified in the tax legislation. Then we all know what it is and where it is and where it goes. So that, I think, was an opportunity missed, but the reps didn't like what they'd seen anyway, which is around family income, as I recall.
Yes, they sort of thought it's the thin end of the wedge for stepping into inheritance tax. Although, again, as the richer get hit, I'm sure that is going to come back on the table, because a lot of family trusts, in quotation marks, will try and make sure their income is not taxable in those manners. So I do think that the going forward, as this bill is passed, there is going to be greater scope for tax planning. Not going to say avoidance, for tax planning, which may invite further amendments to legislation and a plethora of court cases, even though there's difficulties with taking cases through the courts because of various other issues around there. An issue that we thought about yesterday, and the answer we sort of came up with on the consolidated development levy, which was affecting the TET tax, education tax, and so on. I think the answer we gave is the answer that the House of Assembly is doing, which is that they will continue to be funded and kept as institutions running what they're doing, but they will no longer go to the market for money. They will take a share of the money that is collected in the single development tax, which is 4%. And ultimately, we're going to have to step back and look at harmonizing all of these various things, because when you add 4% of this and 7.5% on the VAT and 20% on the rates, and I don't know whether they've approved the dropping of the rates, it wasn't clear from what we saw, then that hole that both of you have alluded to may become bigger.
Yes.
Quite so. I think your point about tax planning, I think, is very sound. I think a lot of Nigerians perhaps haven't done as much as they should, but the increasing sophistication of the tax system probably means this is a good time to be starting to think more carefully, especially about income that's offshore, which will now become taxable. Is it time to do something about it? If it's outside the country, it's not within the purview of the probate duty because it's not under the jurisdiction of the state high courts, but it could be under somebody else's state duties where the assets are.
Well, we have a few minutes left, so if I could ask you both to just take a couple of minutes to give a final reflection. We haven't seemed to have got any questions, or perhaps it's clearer to everybody else than it is to us, or everybody's keeping their powder dry. But Theo, shall we start with you?
Yes,
then Russell?
I was just going to say quickly that with regard to foreign income and assets, I mean, you've got the FATCA, rules that oblige foreign banks to report, the what they hold for, citizens of various countries. And when you're a citizen of Nigeria with an account in Switzerland or wherever, they send the information to Nigeria. Now, I don't think that the person who receives the information, which might be FRS, is passing it down to the states. But at some point, if they start doing that, then the states might start getting visibility on what foreign assets or holdings a resident has. So that's something that I expect them to think about seriously. That's the states and how to gather that data and then the income. But all in all, I think what the proposed bill is doing is trying to take more money from those who have and less money from those who don't have. I mean, that's the broad theme. I see there were 1 or 2 questions in the chat. I mean, somebody made a point about going back 6 years and extending it beyond 6 years not being entirely fair. But then reminded us that in Europe, some people are still dealing with 20-year-old transfer pricing cases, So I guess tax officers everywhere in the world are the same.
I think the transfer pricing case is naturally complicated and can take a long time to resolve. It may well have started in the 6-year time frame, and then took time to resolve. And what normally a tax authority would do is say, well, right, safeguard our position, here's an assessment, and you object to it, and then we can continue discussing it. I think that's understandable. It's giving people.
Yeah, and even in Nigeria, that works. In Nigeria, if they give you the assessment within 6 years, then the conversation can go on for 10 or 20 years.
Yes.
Absolutely.
And then the other question was about Okay, I think that's more or less a question about how the interplay between policy and legislation. That's one of the things I think we mentioned yesterday, that it's not always clear whether the policy around a particular provision has been well thought through. Like here, we're talking about states getting less money from VAT, less money from PIT, and nobody has, what are they going to do? And the impact won't be felt for a few months. Maybe by this time next year, they start seeing the result and say, well, how? This is not what we expected. But, but those are my thoughts. I think more money from the higher, the well off, and less money, less tax from the lower income is not a bad thing. But we need to get the services from government, which is.
I think on that, I've said over the years, Russell? I think there's a change in the social contract from what was there before, which was along the lines of citizens, we won't trouble you for taxes, and citizens won't trouble their politicians for accountability. And that is broken down because it can't work anymore, because the oil money is not what it was. So a new one is required. And this is the half of it, where we're now seeing more of an obligation to pay taxes. And individuals are the ones who have to pay for a country to run, because companies don't really exist. And where else does it come from? People in the future. Or
Dapo, who asked the question around the policies, has got his hand up. Can we allow him please just make it pointed? Sure. Yeah. Candice, can he speak? Dapo, can you unmute?
He is unmuted.
Thank you.
Okay, I'll Mike. Go ahead, unmute yourself, Dapo.
Yeah. Just you've dealt.
Could you just tell us who you are so
Dapo Ladimeji. So
okay.
I was just responding to Russell's saying that the 20 years is only you raise the assessment within 6 years, and then it takes forever. I can say that's not actually correct, because I personally have dealt with a case where the revenue went back 20 years, because they were alleging that the fraud, the offshore manipulation, started at the very beginning, and we didn't dispute that they had the right to go back, but managed to get the client off the worst of that. But there was no denying that they had the power, because they could, to go back in as far as they wanted, because they could go back to where they thought the fraud started.
Yeah. Depa, thanks for that clarification. I agree with you. The tax law in Nigeria already allows that, and it does in many other countries. If the tax authority can show that there was a fraud or a default of some kind, then they can go back, forever, more or less.
As long as they want.
Exactly.
But what I don't like is them saying, well, we don't know if you've done anything wrong or not, but we still haven't finished finding out. And because we didn't get round to you in the 6 years, so now we're going to send you a notice of invitation for an audit, and that will extend it for another indefinitely. That is where the protection seems to be lacking. And the general thinking is, if they want to use the extended time frame to go back into the ancient history, they've got to show prima facie that there's a problem.
Absolutely. I think we're on semantics here. I think it's in general agreement everywhere. Senlon v. Olin, all the settled tax cases. If there is fraud, serious misconduct, or so on, that you can go back as far as you need to. If, however, Senlon v. Olin, if everything was disclosed on there, and to use the words of that case, any competent inspector would have been expected to have seen it and picked it. If you didn't do it, then I'm sorry, you can't go back, because it was disclosed. So there has to be something undisclosed. I think we're all basically saying the same thing. Dapo, thank you very much for that question. It's definitely useful. And your other comment about that conversation around industrial policy, the political economy that is around the whole of the system, as Russell says, people is no longer a rent where you do what you want to do with it, and we won't ask you about it. The more you take money, and the more you take money off the big boys, the more they're going to ask you, what are you doing with that money? So I think those conversations are going to have to become real and tangible. Any last words from the two of you, because we are at our time.
I'm done. Russell, over to you.
I think I've spoken enough, to be honest, Mark. So thank you very much for your moderating, and both of you for the comments.
Thank you. Thank you very much, ladies and gentlemen, for listening in. As you registered, the slides will be shared with you if you have any further thoughts. There are contacts of both Theo and Russell if you want to take matters further. And we do wish you all the best in this changing environment. Arm yourself as much as you can with knowledge. That is your best defense. The days when you could hide behind, oh, I didn't know about that, are disappearing very, very fast. It will also be available for those of you who want to see it again, I understand, on YouTube at some point. So that would also allow you to go back and come back on certain things. On behalf of the team, thank you very much. And Candice, you may wish to close the meeting. Thank you.
Thank you, everybody. Thank you.
Thank you.
Bye-bye.